Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Avient Corporation Annual Report. Avient Corporation offers a diverse range of businesses and services across various industries. In the color, additives, and inks segment, the company provides custom color and additive concentrates for thermoplastics, dispersions for thermosets, and specialty inks. These products cater to numerous markets, including medical devices, food packaging, personal care, transportation, building products, textiles, appliances, and industrial applications. The Specialty Engineered Materials segment offers specialty polymer formulations, services, and solutions for designers, assemblers, and processors of thermoplastic materials. This segment caters to various industries, such as healthcare, construction, filtration, outdoor furniture, and recreational equipment. Avient Corporation sells its products through direct sales personnel, distributors, and commissioned sales agents. The company's extensive product offerings and services are designed to meet the specific needs of diverse markets and industries. With a rich history dating back to 1885, Avient Corporation has established itself as a leading provider of material solutions globally. The stock price of Avient Corp has remained relatively stable over the past year, with a mere 1.06% change. While several news events have taken place during this period, it is challenging to determine their precise impact on the stock price due to the lack of detailed historical data analysis. One notable event was the announcement of a quarterly dividend in February 2026, but no specific stock reaction was reported. Additionally, Avient expanded its Dyneema capacity and saw modest growth in packaging demand, although this news coincided with earnings release that resulted in a significant stock price change. Major financial announcements, such as earnings reports, have had a more substantial impact on the stock price, exceeding the 1.06% threshold. For instance, Avient's stock rose by 1.97% to 2.17% after announcing its fourth quarter and full year 2025 results. Similarly, the company's stock dropped 2.46% in pre-market trading after reporting mixed third quarter 2025 results. In conclusion, while several news events have taken place during this period, it is difficult to determine their precise impact on the stock price due to the lack of detailed historical data analysis. However, major financial announcements, such as earnings reports, have had a more significant impact on the stock price, exceeding the 1.06% threshold. Avient Corporation maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Avient Corporation trades at a higher price-to-earnings ratio of 48 times, and a higher price-to-book ratio of 1.66 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 60% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 2.53%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a review of key financial metrics. In this case, an increase in total assets by 3.8% from $5.81 billion to $6.03 billion suggests that revenue-generating activities are expanding. This growth is also reflected in the company's revenue, which increased by 0.6% from $3.24 billion to $3.26 billion over the same period. These metrics indicate a positive trend in revenue growth, suggesting that the company's efforts to expand its operations and increase sales are paying off. The net income of the company experienced a significant decline between 2024 and 2025, decreasing by 51.1%. This drop was largely attributed to a decrease in operating income and an increase in expenses. As a result, the profit margins also suffered, although not explicitly stated. It can be inferred that they decreased due to the decline in net income despite an increase in revenue. A closer examination of the financial data reveals that the gross margin declined by 3.7%, from 34.9% in 2024 to 31.2% in 2025. Furthermore, operating income plummeted by 38.1%, from $329.3 million in 2024 to $203.5 million in 2025. These decreases in gross margin and operating income are likely the primary reasons for the decline in profit margins. The company's ability to maintain its pricing power and manage costs effectively appears to have been compromised, leading to a decrease in profitability. The company's financial performance indicates a consistent trend of generating positive operating cash flow over the past 3 years. In 2025, the net cash provided by operating activities reached $301.6 million, marking an increase from the previous year. This upward trajectory is also evident in 2024, where the company generated $256.8 million in operating cash flow. Even in 2023, despite being the lowest among the 3 years, the company still managed to produce a positive operating cash flow of $201.6 million. These figures collectively suggest that the company has been able to generate sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. The company's debt level has experienced a notable change over the past year. According to the financial reports, total liabilities and equity increased by $214.5 million from 2024 to 2025. Furthermore, as of December 31, 2025, the company's total debt stood at $1.278 billion. This significant increase in debt level suggests that the company has taken on more financial obligations. However, despite the rise in debt, there is no substantial change in interest expenses evident from the provided information. The reports do not explicitly state any notable fluctuations in interest expenses, indicating a relatively stable financial situation in this regard. Management's outlook for the company is optimistic, with a focus on improving efficiency and reducing costs. One key area of emphasis is the reduction of finite-lived intangibles amortization expense over the next 5 years. Additionally, the Clariant Color Integration Restructuring Program has resulted in significant cost savings and is expected to enable the company to better serve customers. Management's strategy appears to be centered around streamlining operations and improving profitability through targeted initiatives. The company's financial performance will continue to be analyzed and reported on in the Management's Discussion and Analysis (MD&A) section, providing stakeholders with a clear understanding of the company's progress towards its goals. Overall, management is committed to delivering cost savings and improved efficiency, positioning the company for long-term success. The company's acquisitions and divestitures are notable aspects of its financial performance. However, upon reviewing the extracted summaries, it becomes clear that there have been no explicit mentions of acquisitions. On the other hand, there is some indication of divestitures, albeit unclear in nature. A loss from discontinued operations of $0.1 million was reported on page 1 for 2023, but not present in 2025. This could potentially suggest a divestiture, although it may also be a one-time loss. It is essential to note that the mention of the Calvert City site on page 10 appears to relate to environmental liabilities rather than a divestiture. Therefore, while there are some hints at potential divestitures, more information is needed for a definitive conclusion. The company's financial strategy has been focused on rewarding its shareholders through dividend payments. In fact, the company has a history of paying dividends, with confirmation found on page 2 of the summary. The amounts paid out have been significant, with $94 million in 2024 and $98.8 million in 2025. This indicates that the company is committed to returning value to its shareholders through regular dividend payments. That concludes the financial summary for Avient Corporation. Feel free to comment below, and I will be happy to answer them when possible.